Welcome friends. 27th March 2017 was a historic day for the indirect tax professionals as well as indirect taxpayers in India. On 27th March 2017, the Finance Minister tabled 4 key bills for the purpose of GST in the Lok Sabha. The 4 bills which are tabled in the Lok Sabha are Central GST Bill, which comprises of 174 sections and 3 schedules, the Integrated GST Bill, which comprises of 25 sections, Union Territory GST Bill, which comprises of 26 sections, and the Compensation Cess, which comprises of 14 sections and 1 schedule. Let us understand these bills in a bit more detail. Most of us are curious about what are the likely rates of GST in the GST regime. In this regard, the GST law prescribes that the maximum capping on the rate would be 20% for central GST law and 40% for IGST law. Similarly, 20% capping has been done for UTGST law. So effectively one can say that the rate of GST in the GST regime would be maximum 40%. These are the maximum rates, or this is the maximum cap which is prescribed under GST law. The center and state have a flexibility to levy a rate which can be below the cap of 20%. For one has to also keep in mind that the central government is also going to levy a cess through the compensation law on certain products. So over and above this 40%, a compensation cess would also be applicable. Let us discuss about the compensation cess. The compensation cess would be levied by the central government on certain products. One of the products which will attract compensation cess is aerated drinks, which is expected to attract a compensation cess of 15%. Again, this 15% is the maximum rate, and the government may decide to levy a cess which can be lesser than the prescribed rate of 15%. Similarly, motor vehicles are expected to attract a 15% compensation cess. Additionally, a product like a pan masala are expected to attract a maximum compensation cess which can be up to 135%. For tobacco products, the compensation cess which is prescribed is 4,170 rupees per 1000 sticks, or 290% on ad valorem basis, or a combination of both. To discourage consumption of tobacco as well as pan masala, the central government is proposing a heavy cess. Additionally, coal and certain other products are expected to attract a cess up to rupees 400 per ton. It may be noted that the compensation law prescribes the maximum ceiling limit. The central government may levy a cess which could be lower than the prescribed maximum ceiling rates. Small dhaba owners and restaurant owners who are having less than 50 lakh as a turnover may opt to pay a tax which would be only 5%. This is a composition rate which is applicable for restaurant as well as dhaba owners. Additionally, a 1% scheme is applicable for traders. Further, a small manufacturer having less than 50 lakh rupees turnover can opt to discharge GST liability at only 2% rate. So effectively one can say that there are 3 composition rates which are applicable for dhaba owners and restaurant owners, which is at the rate of 5%, for traders which is at the rate of 1%, and for manufacturers which will be at the rate of 2%. It may be noted that there is a differentiation which is carved out in the composition rate for traders and manufacturers. So it is likely that in days to come there might be a dispute on the aspect whether an activity which is carried out by a person is a trading activity or a manufacturing activity. We were expecting that these kind of challenges as to whether activity amounts to manufacture or not may not continue in GST regime. However, that seems unlikely now, given the fact that there is a separate rate for small manufacturers and small traders.